Vietnam's Ministry of Finance is proposing a significant change in how small and medium-sized enterprises can access credit. A draft revision of the law on support for SMEs now includes the possibility of using digital assets, virtual assets, and intellectual property as collateral for bank loans. This move could help bridge a long-standing credit gap, where over 98% of Vietnam's businesses are SMEs, but only about 20% receive formal bank credit. The current system favors businesses with physical assets to pledge, leaving many startups and tech firms without viable lending options. The proposed policy is open for public consultation, according to a recent report from Vietnam News. If adopted, it would allow SMEs to use future-formed assets, rights in property, intangible assets, and digital or virtual assets as collateral. This includes valuable intellectual property like software patents or proprietary data, which have real economic value but are not easily monetized under traditional lending models. The ministry attributes the current credit gap to a lack of eligible collateral, limited financial transparency, and the relatively small capital bases of many SMEs. By acknowledging the borrowing potential of intangible assets, the policy could unlock access to formal lending for a large number of businesses that have historically been excluded from traditional credit channels. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Draft law also signals a broader shift in how lending decisions might be made in the future. Instead of relying solely on fixed assets, banks could evaluate SMEs based on credit ratings, business plans, cash flows, and market potential. This approach could better reflect the true economic value of innovative and digital-first businesses. The inclusion of digital assets as collateral is particularly noteworthy. It reflects a growing recognition of the economic role that virtual assets play in modern business models. Startups and tech firms that rely on software, data, or digital infrastructure could now have a path to formal financing without needing to liquidate their core assets. In addition to the lending framework, the draft also includes incentives for green and sustainable enterprises. These include credit guarantees, concessional financing, and support for ESG-aligned businesses. This aligns with global trends where financial systems are adapting to support sustainability and innovation. The policy is still in the consultation phase, and its final form will depend on stakeholder feedback. However, the mere proposal represents a major step forward in how Vietnam approaches SME financing. If implemented, it could reshape the financial landscape for thousands of businesses and provide a new model for credit access in the digital economy. The next signal to watch is whether banks and financial institutions begin adapting their lending criteria to accommodate digital and intangible assets. This will determine how effectively the policy translates into real-world credit access for SMEs. Another key factor is how SMEs themselves respond to this opportunity. Many may need guidance on how to assess and value their digital or intellectual property assets to meet the new lending standards. Additionally, financial institutions may need to develop new risk assessment tools to evaluate non-traditional collateral. The success of this policy will likely depend on collaboration between regulators, lenders, and business owners to create a functional and fair system. If Vietnam can successfully, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Implement this framework. It could serve as a model for other developing economies facing similar credit access challenges. For now, the draft remains open for public consultation, and the Ministry of Finance will likely consider a wide range of feedback before finalizing the law. The outcome could have lasting implications for the country's entrepreneurial ecosystem, especially in the technology and innovation sectors. If the policy is adopted, it may also encourage further innovation in financial services, including the development of new lending platforms and tools tailored to digital assets and intellectual property. This could open the door for more inclusive and dynamic economic growth in Vietnam.